Hey, welcome back there, guys. I am going to jump onto gold here right away. This is actually really exciting, really, because we've been waiting to get out of this channel for a long time. We had this wedge pattern forming, and we were rejected several times. And yesterday, we had a daily close and now a weekly close above it. So we will definitely keep an eye on that, see what happens if we can have a few days follow through on that. Definitely starts looking at higher price targets for gold going forward. The market in general isn't super strong, so you can see people are probably trying to head over to gold as an alternative to some of the pain that we're feeling with. Here's the SPY. Maybe we're coming into some resistance here. Nasdaq, not so much. I mean, this is a long trend line here that I've got, and we'll see if this can recover back over. The dollars are still kind of hanging around that same area. So, I think with that, it had that break, it touched up on this line here. I'm not seeing it going back there anytime soon. That's decent for overall for our commodities. Let's see, TLT. The bond market too. I mean, there's really nowhere to hide here. The bond market, we're down. I think we're hitting strong support here, so that will bring your 10 or 20-year interest rates back down a little bit on the bond yields. And that might bring some fire back into the tech markets. We'll go to take a look at Bitcoin here and see what that's doing. It's kind of struggling here. It's definitely going to need a little more traction. We've got this long trend line here. It's holding up at 44,000. Yeah, I mean, if the market starts turning around here, we might see a little bit on Bitcoin. Check a few other cryptocurrencies here quickly. Got a lot of delay here on the computer for some reason. Solana, yeah, there's nothing. Yeah, I mean, it's maybe back testing. We'll see. I think Cardano is, right at the bottom of its range as well here right at the $1 mark. So, I mean, yeah, you could. Again, if the market's looking like it could recover, then, crypto will probably recover with it. But definitely, you're not. I mean, with the volatility in the markets, this kind of scares me. I just can't see why people would want to put their money towards a cryptocurrency at this point. Um, let's get looking over to oil. Oil also had a big day. Kind of a new all-time high, or not all-time high, but at least new high for recent highs. We hit right into that 95 mark, just under 95 we were expecting to get to. So, we'll probably have a little bit of a fight here. But if we can get over that 95, we're definitely going to start pushing up into this $105, $108 range, I think. And then time will tell. I mean, if we look into our charts or into our few things here with oil, I was really trying to point out, with that commitment of traders report, we're still, there's no hedging. The commercials are right neutral. with oil. So until, and these are the points where really they're not putting anything out there for the market to consume. Retail's not buying any. And, as we said before, on the commitment of traders, the retailers are usually wrong, and the big companies, the commercials that are selling their product, the commodity to the market is right. So, just looking at these time points here, you can see when there was basically no hedging, forward hedging, we were at a low, no forward hedging. Here it was a good buying opportunity for oil, and the same for these points. So that's where we're at right now. I mean, there's as high as we are, uh, they're not forwarding out any of their contracts to the market. So that's I think a really positive thing for oil. We could look at supply. Kind of wanted to show here. This was the last. We're right at the demand is right at where we were right pre-pandemic, and we have a 3 million barrel per day shortfall. Back in 2008, we had a 2.4 million barrel per day shortfall, and we had $150 oil. So I just did a little quick math there, saying if we're 25% larger shortfall on oil, we might be 25% higher on the price of oil. So looking at forecasted rigs, they're looking here to get us back to where we were pre-pandemic. We're looking at the end of the year, till we can get that rig count out, and so we got several months here where if we're going to keep showing up with the 2, 3, 4 million barrel per day shortfall on oil, I would see that's going to drive the prices up even higher. Just looking at CapEx, money that companies are going to be putting into drilling or to expansion. We can see we're still going to be a lesser amount of CapEx than what used to be done. A lot of companies we mentioned there in the other video, Shell for one, they're not going to be putting a large amount of money into any sort of oil projects anymore. So I think we're going to see this demand coming for everyone starts getting back going and traveling, and we just don't have the oil to keep up instantly. And even with that, when we look at what the U.S. for shale production, it's really, you can see these oil supplies, how they dwindle so quickly, and so you literally is just, you have to keep drilling and constantly drilling away to maintain. So there's been some forecasts saying we're going to go 12, 14 million barrels in the States here if we went back to 2,000 rigs. I think we're around 600 right now, but you can see there's not a sustainable oil in the shale oil, and the minute you stop drilling or you can't keep up on drilling, where you start losing on supply. And this was kind of a forecasted long range here. If we had $100 oil, where we could get for shale oil production. Again, all depends on which fields are getting that attention and how long they're holding their oil supply from drilling. Yeah, and we're long term there. We look, when we're looking at oil, I like to bring this up and kind of look at a large view. We got kind of this old range here, this 105 to 110 that we marked out. You can see we've got some channels that kind of correlate with these highs. I've got this one here that's interesting, that's really pointing up somewhere up into the near $200 range on oil. I know it seems like a tall order, but we gotta keep in mind, when we look at that M2 money supply, and you look at the stock market, and you look at the valuations of all the assets, and everything's going up, and it's tracking with that M2, and oil just is falling behind, and I think a realistic target for oil has to be something up in that range where that M2 is pushing, especially now if we're getting low on supply. A fair market value for oil, with all the money that's in circulation, is going to be higher. So that pretty much covers what I think I want to talk about today. So anyways, I hit that like and subscribe, and keep looking for those companies, oil companies that are got some good numbers. They're all looking at buying back their shares. They're aggressively working down their debt. So there's a lot of gems out there that could actually go up in price just because of their share buybacks alone. So, um, anyways, we will have more for you in a few days. Thanks for watching.